big boy. I got a big dog. What do you want? Do you want out? Do you want out, big dog? Well, good morning, traders. I got dogs that want out. Imagine that right when I'm starting the stream. Right when I'm starting the stream. Let me pop in this Alpha Trading Discord real quick. Bing! There we go. Let you stare at this beautiful VRE chart with the distribution overlays. Looks like a lot of noise, doesn't it? It's good noise. It's real good noise. Tell them. What's up? Tell me. Tell me. What? Jesus, let me let this big sucker out. Go. Go, wild beasts. Go. Out into the wilderness. Yeah. Got about 12 acres out in the country, out in the middle of the woods, and it is tick season. Just pulled 2 ticks off the dogs. Tick medicine doesn't matter out here. They don't give a shit. You can put the best flea collar and drops and all that stuff. Those ticks are just like, that's a good chemical. They just gobble it down. It's crazy. So, yeah. But I'll tell you what, if you don't put the tick meds on, oh my God. They look like some of those pictures you see of deer. Got about 1,000 ticks on them. Pretty bad. Pretty bad. We've had 2 real mild winters. So, yeah, man. Oh my God. They were getting ticks in the winter. So imagine how it is in the spring. Or I guess it's spring. Do we even have seasons anymore? It's kind of bouncing between summer, winter. Summer today, winter tomorrow. It's like 30 outside right now. It's like, what is happening? It's all good. It was 85 the other day. Made up for it. Climate change, huh? Yeah. It's actually, it does happen. It's not man-made. What a scam going on. Earth goes through cycles. It's okay. These charts are heating up. I'll tell you that right now. Who do we got? We got Jeff. Oh, look, we got Django. Oh, there's Yasha. It's party time over there. Independence.
Hey.
Freedom. What's up,
Freedom.
What's up, buddy?
Double birthday.
Yeah.
Actually, multiple birthdays. My dog's birthday, too.
Oh, jeez. That's right. Happy birthday to all yins.
Yeah, man. Thanks.
Yeah, man. That's good stuff.
I'm actually busy. Chop, working.
Chopping.
Being very productive.
Nice. Yeah. Good stuff. Real good stuff. So, what's old BTC doing besides having a nice tight daily range, ranging in between the bottom side of the 68.3 Laplace and the tight daily range right here. Nice sideways action. What's going on with Dixie? Dixie, what are you doing? Very weak. Dollar's very weak. Don't get gaslighted by these financial gurus. Think they know what they're talking about. They don't have the VEPS, right? It's all gaslighting. There's always an agenda out there. Always an agenda. Which is unfortunate. But fortunately, Alpha Trading is live streaming. So we can get a look at it live. Let's see. I'm trying to almost making a 1SD run, right? Here's the top side of the 68.3 Laplace. Here's the first standard deviation, the blue cross line. Where's that 1SD at? Right below the weekly range. This has been a narrative for Dixie lately, right? Can't get up above. It has. There's been a few days where it'll climb up above a weekly range, just dumps right back down. And now the weeklies are populating, or the dailies are populating below the weekly. Once we get this new monthly in, God, what's the date? Oh my, really? I mean, it's like I get lost in the days, right? I mean, there's no reason to keep up. I know it's Tuesday trading day. What the date actually is? 25th. Wow. Where did this
month? Like 3 days before my 5-day ends and like 6 days before my 7-day ends.
Exactly.
So, I don't know, bro. It's Tuesday.
I just have to look at the 5-day candle to know where I'm at in the world. Hilarious. Oh, goodness gracious. Yeah, it's wild, man. Time flies. Time freaking flies. Especially when your dogs are tick hounds. Can't do anything about it. Sitting there talking to myself before anybody showed up. Ticks everywhere. Just pulled 2 off Big Dog. And they're fully medicated. It doesn't matter. These ticks are hybrid devil creatures is what they are. It's fucking amazing. They're just disgusting. Brings me joy to stick a lighter on them. Right? Get those suckers off. Yeah. If you don't know how to pull a tick off, we'll have a little tick pull demonstration. Slow and steady. Pressure building. You'll pull the tick right out. And then you stick a lighter on him and just watch him burn. So nothing better in life than seeing that little hellish creature burn alive. Yeah.
All right.
Here we go. Hey, it's a birthday. We're talking about burning ticks. What's going on there? What's wrong? What is wrong? All right, guys. Let's get serious here. Let's get serious. So, Bitcoin just ranging, like I said, underneath this tight daily range, and we're going to get a look in these charts in a minute. What's the S&P doing pre-market? Down where? By yesterday's first support level of the daily volatility range. Yesterday was great. Okay, the expected move yesterday, the expected move on SPY yesterday, right? Top side 413, bottom side was about 410.5. Literally ran the whole expected move. So once again, right when the market opened yesterday, I literally saying, hey, there's not a trade right now. We got to wait, right? You were literally in between the daily range and the weekly range. Now look at the wicks. Look at the wicks up into the top side of the weekly, right? This was kind of like a shot across the bow. The bears are up here sitting on the top of this weekly range. They're going to kick this down. But guess what? The bulls are down here in the weekly and the first support level where it got kicked up. So if you had a little patience into the first hour of the trading day, right, you would have seen this setup, and it was in the charts. We'll go over to it in a minute, where early morning session, 412 put. Afternoon session, 412 call. It's a pretty easy day, man. Pretty easy day. Same strike, just flipping it, right? Puts and calls. Played out real nice. And it was dangerously close to being a nice profit at the end of the day. I mean, if that would have got up over 413, got that 412 strike one more into the money, you would have probably, when I was looking at it, it was about 40 cents. I mean, you could have easy 5x, easy 5-6x in the afternoon. Let's see here. Boom, boom. Okay, set. Let's go over here real quick. Pre-market. Yeah, let's see if there was, first let's go to SPY real quick. Let's see if there was some 15-minute going into the end of the day, right? We're pumping up. I mean, there is definitely bear div, right? Bear div setting up. Obviously, there's not a top. Look at pre-market though, right? So I would assume by looking at pre-market, I would have already guessed, hey, there's definitely bear div setting up. All the fishers are up, so we're gonna have to be patient. So I would drop down one more time frame. Got the 9-minute. Oh my. Same. Yeah. Interesting. Let me bump up to a 33. See if this returns oscillator has turned down. You know what? No, nothing. Clean chart. So on the 15-minute, I would imagine this returns oscillator is going to turn down. Correlation's already strong. It was to the downside here on those couple candles and to the top. So you get this return oscillator turning down. That's what we're seeing, right? Little bear div playing out. Early morning. Now when we get the daily open, let me see how the 4-hour closed. Yeah. So you get outside the power mean band here. Slowly but surely making your way to either a 33 power mean, blue dotted line, or the white dotted line's a reverse wave trend. Down there about 407. So I'm going over here, right? Let's see. Where's 407? That's a 1 SD to the downside. Look, pre-market, we're already... let's see. So if we open up here, I'll tell you what. That's about the bottom side of the 68.3 probably. Yesterday's 1 SD to the downside, but 407 is what I'm looking for. Is it going to check up on it today? That's the top of the weekly or top of the monthly range right there. Probably going to be right around the 1 SD to the downside. Probably going to be 1 SD to the downside. Let me load up this brokerage account, see what this is.
Already on it.
Let me see here. What are you saying, P-Font?
Yes, it's already on the one ST to the downside now.
Well, it hasn't even populated yet.
Well, I mean, it's 410.72 where it's trading. That's where it's at.
Right.
You know what I mean? Yeah.
But now.
So, I mean, I had mine on overnight stuff. You know what I mean? So real time or extended hours.
Right. No,
so
I
it's
hear
already
you.
There.
Let me see.
And there's ghost prints printing up in around 412.31, which are usually they'll test those first if they have ghost prints up there.
Yeah, but see, you can have posts, but the thing is we don't know where this first standard deviation is yet because the market hasn't.
Oh, you mean on the new one?
On the new one. Yeah, on the new
I'll shut up. Sorry.
No, you're fine. You're fine. You had me looking.
I'll be in the corner when you need me.
All right, brother.
Dude, they fired Tucker Carlson after I finally quoted his ass yesterday. Fired him last night.
Dude, it's ridiculous shit going on in this world. So funny. Media's, yeah. What are you going to do? What are you going to do? So, yeah, we need a market open. We need a market open to get this new 1SD. You can see if it opens right here, I want to see where it opens up in the 68.3 Laplace. Probably closer to the top side. That's how this usually works. You dump out pre-market. Like when you pump up pre-market, you're going to be closer to the bottom side of the 68.3 Laplace distribution. So, yeah, we'll get that populating. Until, what time is it? 9:11. Let's pop over here real quick. Let me check Bitcoin out. And we will get back on SPY. I just wanted to see how that closed. Get a little idea why it's down pre-market, and there was definitely bear div between returns and price action. The only divergence anyone should be looking at. I mean, you can use an RSI or a MACD or Stokes or whatever you want to use for divergence, but once you come to the realization that price action isn't following price action's following the returns, it's a no-brainer to use return oscillator, right? It's a no-brainer to use a returns oscillator. Z-score of log returns, our Fisher transform indicator, all right, and our DLP. Everything over here I use for divergence. Everything's built on returns. What do we got in the background? What do I hear then? Is that you, HUD Spy? I hear something. There we go. Let's see here. So, got another 4 hour. Let's check out Bitcoin. Okay, interesting. We're at the bottom side of the power mean band on the 4 hour. Haven't checked up on this wave trend yet. It's tried a couple times. Definitely has tried a couple times. Back down below the 9 log MA. So right now the data set's stuck below the bottom of the power mean band and the 9 log MA. Very safe space, right? If the BTC data set's looking for a safe space, there it is. For all you kiddies out there, all you BTC kiddies, there's your safe space. Jump on in. Let me see something real quick. What's it talking about? Durable goods order. Yeah. Yakety yak. Yeah, exactly. Let me see here. Oh, not El Salvador. Leader in Bitcoin adoption. The unlikely leader. Yeah, I wish I knew somebody in El Salvador, right? Because you can't believe any of these stories. I'd like to see how much adoption Bitcoin is getting down in El Salvador. I mean, can you go in the store and buy things with Bitcoin? Here's the thing. I'd be using Doge, not Bitcoin, to buy bread. All right. Now, that's going to be a different story, and Bitcoin gets at higher prices, right? And that's the whole thing, in my opinion. It's a store of value. It's a store of value until then. I mean, using it as a currency, there's way too much upside. There's way too much upside. This isn't like the US dollar, right? You just turn on that money machine and start printing. There's a hard cap on Bitcoin. And there's literally about 4 million lost from on-chain analysis that either haven't moved for a long time, right? People lose their private keys from way back when. I did see that there's a wallet that hasn't moved since 2009, I believe. Late 2009. A lot of Bitcoin moving around. But of course, maybe somebody's moving it to hardware wallet. Who knows? Who cares? What's the market all about? Buying and selling. So, and everybody gets all freaked out. Hey, Bitcoin's moving. Yeah, that's what it's supposed to do. Right? Bitcoin does move around. If it sells, good. Just going to give a lower entry price for other individuals. But I highly doubt at 27.4, somebody's going to sell off $60 million in Bitcoin. Hey, let them if they do. I think there's enough buy pressure to absorb anything right now. We could get a nice dump, but Why did we get the dump in the first place? Right? We were outside the power mean band on the daily. This rocket ship move here. Sideways action. This is what you'll see happen too. When you get outside this power mean band, you get to a top, you're likely going to go sideways, reacquire the power means. Why? Because returns mean revert. These are all different lengths of means. Okay. The 33, the blue dotted line, being my favorite. And as you continue to watch these streams, you'll see why. It gets nailed all the time. So does the reverse wave trend. And the way this works is when you get a data set move outside the power mean bands, first you're going to reacquire, right? The returns start mean reverting. And at some point, you're going to go down. You're going to tap that wave trend. Reverse wave trend. Let's not get this twisted. It's not a regular wave trend. It's a reverse wave trend. You usually nail it like you're doing right now. In BTC, the last 3 days, 4 days, 5 days, just been hanging on right on the top of it. So what you don't want to see here is these log MAs cross down. And why do we use log return moving averages? Because it's not a lagging indicator. These moving averages are built on log returns. That's right. Blow the horn. We're speaking truth here. So Discord and their soundboard. You gotta love it. Incredible. Love the soundboard. Thanks, Discord. That's right. Ducks for everyone. So anyway, this is what happens, right? Now you're just resting on this wave trend. See, yesterday, got a wick down to the bottom, pulled right back up, closed above the wave trend. Here you are. Got another wick to the bottom power mean band. Let's see, where's this 33 at? Up here about 28.4 area. Got the 9, or you've got the, let me see here. Yeah, you got the 9 up here at about 29K. 33 power mean. Yeah, I could see that as an eventual bounce here and see what happens when we get to that area. Really don't want to see the log MAs cross down. These usually are pretty powerful. You can see when they cross down, usually get a nice move. The thing is though, right, it's going to be quick. It's going to be quick. Let's see. Fisher strong, 99 log MA strong. Really like it. Volatility is contracting, negatively correlated on the low length. Entropy is telling us right now we're in a random walk. We're in a random walk, and we got a few indicator upgrades that happened yesterday. Thank you, Jeff. And the Fisher published all kinds of fun stuff. So yeah,
do you mind going over what they did?
Let's see. The Swiss got upgraded. So now if you reset all your charts, your entropy indicator will be the Swiss. And it's got so many bells and whistles in it. I like to keep it pretty simple. Yeah, it's a great indicator. You need to know when the market's trending, when the market's in a random walk. You hear a lot of analysts out there talk about trend, right? You never hear them talk about a random walk. You'll never hear them talk about it. Why? Because they don't understand it. You need to understand what a random walk is, right? And you need to understand what the distribution is, because where are these data sets randomly just walking around inside the distribution? Everybody that's new listening, because a lot of the older OGs here, excuse me, know about Monte Carlo simulation. Google Monte Carlo simulation. Check it out. You'll see like 10,000 simulated runs of a data set, and they literally create the distribution. They will create the bell curve, a normal distribution, looking at it sideways, right? That's why we have our projection boss, right? That's what this is. It's literally creating the distribution. Now you can switch between Laplace distribution, that's what I have it on now, or normal distribution. Let me see here real quick. Let's move this up to this pump. Whoop, one more back. Right there. And when you're using this indicator, you want to throw it on, right, where you have a reversal, right? Where you have a reversal, where you have a pivot in price action, where you have a pivot in price action. You can see where we're at on this projection right now. I mean, it's literally made a run up to, see, this is the, right here in the middle, this is the 68.3% Laplace distribution range on the projection. The next blue line and pink line down here, that's the 95.4% Laplace distribution range. Go one more out, 99.7% Laplace distribution range. And then just because we're dealing with cryptocurrency, I've thrown on a fourth here, and this is a 0.9999 percentage level. How do these probabilities work? It's not that there's so if the data set's at the white line, it's not a 68.3% chance it goes to the top or the bottom of that area. It's a 68.3% chance the data set stays inside. There's a 95.4% chance the data set stays inside this range, a 99.7% chance it stays in this range, and a 0.9999% chance it stays in this range. So we throw that extra, that really, I mean, this thing is way far out if you understood. It will tame cryptocurrency volatility. That's why I throw it out there. It had no problem busting outside to 99.7. As soon as you get out here, immediately there's a 99.7% chance you reacquire this level. So once you get outside the distribution levels, then it's a probability to pull back into that area. Just like right now during this projection. This is a longer one, but I still like it. There's a 95.4% chance it reacquires about 26.5, 27. You know, did we already get a wick there? We almost did, right? We almost did. So literally is what you can do. You can pull this back to the dump, right here. You know what? We could go all the way to the top. I really don't want to though, because of this bounce off of the top side. There you go right now. So on the dump, right? We got outside the 95.4 Laplace, made a run to the 99.7. It is pulled back inside the 95.4 right now. And you can see look where the wave trend's lining up, right at the 95.4. So not only do you have probability supporting this price action, you have a reverse wave trend as well, right? And this is a valid projection still. I want to see what happens, because there's a 68.3% chance we go back up. We're almost at 30K again. Close. Do I think this is a bottom on Bitcoin? It's really close. It's really close. That's why we're going to look at some div. We're going to see if we're building some bull div here. Let's see. Let me turn that projection boss off. All right, let's go. Right here, the returns oscillator crossed the zero mean. Was there any bull div? There was some weak. That's about it. Just some weak bull. That's what what's it setting up now, right? You got a lower high. You got lower highs down here, right? Here's the high. Here's the lower highs. Then you got higher highs on the return oscillator. That is a hidden divergence. It's hidden bear div. Is it going to play out? We will find out. Look at the fissures, though. I'm telling you, this move's about over. This move is about over. This has been all random. A lot of people are going to out there say, oh, did you see Bitcoin? Man, that dump. Wow, what a trend. It wasn't a trend at all. Not on the daily. Not on the daily time frame. Right? This thing's a random walk. And that's what you're going to see in these data sets. Most of the time, you're in a random walk, especially the higher you go. The blue is trend, right? The blue is trend. Most of the time, you're in a random walk. You'll get these spikes of entropy when the data set is trending. But just like volatility expands and contracts, so does entropy. Entropy expands and contracts from a random walk to a trend to a random walk. Time is it? My God, they're early today. People already hitting me up when they know I'm streaming. Just watch the stream. How's that? Everybody thinks they're privy. It's okay. It's okay. Most of the times it's family. Let's see. Like I said before, on this daily, volatility is contracting. 981 contracting too. Let's just, for shits and giggles, take a peek here real quick. Let me flip this up. We want number 2. Where are you at? There you are, AVR1. That's the way this indicator's set up, right? Because we correlate volatility to price action, right? We correlate volatility to price action, and there's 3 lengths of volatility right here. You got a 525 length, a 981 length, and a 2400 length. What do all those numbers have in common? And I'm telling you right now, everybody that's been listening for a while and you've dove into this number philosophy that I use, you'll start seeing things, you'll be like, what? They're all square roots, number 1. And what do square roots always break down to? 3, a 6, or a 9, right? The 525. Add all those numbers up, right? You get a 12. Then you add the 1 and the 2 together. It's a 3. Anybody that understands numerology understands what's happening here. And this isn't just some fringe freaking just babble, right? Tesla brought forth this philosophy 100 years ago, right? The 369. Everything he did, everything he created had to do with mathematics. That's what people don't realize. They're like, oh, this guy's a genius. He used this real simple philosophy. And when you use that philosophy, I'm telling you, not just secrets in trading, the universe, right? Everything is math. And so the 525 length, it breaks down to a 3. The 981 added up, right? It's an 18. 8 and 1's 9. The 2400 is a 6. It goes on and on and on. A lot of people don't know this stuff, right? It's wild. Square roots are powerful when it comes to volatility. That's why we use them. So get back to square one, what I was even talking about. The 981's contracting. Let's see if it's negatively correlated. No, it's positively correlated. Yep. Holding down price action. Let's see about the 2400. Boy, it's expanding a little bit. Let me blow it up. Yeah, it's expanding a little bit. So now let's check out the 2400. Come on up here, sucker. There you are. Yeah, a lot of settings on this indicator. Yeah, okay. So we got the 525 contracting, negatively correlated. Now, if you know about the 6 different scenarios that go along with our volatility reads, you'll know that means price action will be walking up, right? Price action will be walking up. Or if everybody knows, right, there is a natural drift in the markets to the top side. It's just the way it is, right? This data set will drift up. But now you know why. It's volatility creating everything. And so you've got the 981 positively correlated contracting. That means price action is going to walk down. There's no negative drift. There's no such thing. I mean, it's just floating down, right? The 2400 is expanding, positively correlated. Now, when you have expansion and volatility and it's positively correlated, those are moves of the top side. All right, it's not just a walk up. So you've got the low length, the high length saying up. You got the middle length showing down. What are you going to see in the candles? Let me change this back. You're going to see dojis, man. You're going to see indecision. The 981 is a powerful length. Look at the candles, right? Especially yesterday. Nice little doji. So we got some indecision on the daily. That's fine. At some point here, let me see on the 4-hour. All the way from this dump candle right here. These are all lower lows, right? Look at the returns oscillator. Look at the return oscillator. All higher lows. So you've got a long-term time series setting up a lot of bull div right here. A lot of bull div. You have crossed the zero mean. You can see the last 2 4-hour candles. They're both up. You're butting heads with this 9 log MA again. It has crossed the zero mean. Let's see. It's starting, though, just like the daily, it is starting to set up some hidden bear. But there's no top on the data set yet. The returns oscillator hasn't turned down. And all the fissures are up. You've got the low length, right? You got the 525. The 525 are the columns. And then you got these 2 lines, right? These 2 gradient lines. Those are the other lengths. It's negatively correlated, right? In the correlation just broke the last 2 4-hour candles. Contracting volatility, negatively correlated, up, right? All up. Let's see. The 981 is contracting. 2400 is expanding. And from what I'm seeing with the data set, they're probably all up. They're all up. Yep. Everybody's gung-ho right now on the 4-hour. Z-score log returns, pretty high. Variance. This is where I like variance down. I like variance low when we get a full contraction. I mean, we're kind of hanging up here at a 0.69. Not too much to read there, in my opinion. Waiting for the move, right? It is rising, starting to expand again, negatively correlated. I kind of see this thing coming all the way back down, to be honest. Entropy percentile, right? Dropping. Dropping. Total random walk. Okay, what's that, the 4? Let's go down this 90-minute. Interesting. Yeah, you got some bull div right here, 90-minute. Getting this little pop, but volatility is contracting. 45-minute. Market open. So that being said, we'll get back to you, Bitcoin. We bounce around here. We flow. Now, let me throw this on SPY. Let's get over on this VRE first. Get that ready. Boom. Yep, right down by the 1SD almost. Interesting. Do I think that's a little too close down here? Yeah, I think this baby's going to want to come down. Now, what time frame was that again? 15 minutes. Let's see if that returns oscillator turn down. Yep. Okay, so you got this. You've got the bear div. You can see it plain as day. All right, you can see it plain as day. Nice pre-market drop. Do I think this? Look at all the fishers. All the fishers are down. DLP's running an outlier right now. Random walk on the entropy. Look at the volatility expansion. Look at the correlation. Negatively correlated. Let's see here real quick. Are they all? Because they're all expanding. Grade. Look at grade's already all the way up at 100% with the 525 length. Could that be profit taking? If you were in a position yesterday before the close and say, I don't know, say you bought a 411 put or something, dude, take the profit. I would be. Why? Low length volatility is expanded to 100 percentile with volatility grade. Volatility grade is a combination of historical volatility and implied volatility. So that being said, let's see if all three lengths are negatively correlated. If they are, this thing's going to go to the 1SD, to the downside first. This is why early morning, man, you do this real quick, get a good idea what your morning session is going to look like. Yep. 981's negative and 2400 negative. All right, they're all negatively correlated, all expanding. So this move continues down through these 15-minute candles to get down to that 1SD. What am I looking for? I'm looking for like the 981 to peak out at 100%, the 2400 to peak out at 100 percentile. If that does happen, you'll see that data set a lot lower. It could actually check up on this weekly, maybe get a wick down. Now, obviously, right now, this thing's popping up a little bit. This thing is popping up. Do I think it's going to make its way all the way up to the bottom side of the 68.3 Laplace here? That's the bottom side of the daily range, too. It could first. It could go up and reject off that level and come down. This is definitely set up, in my opinion, a little bit of a down day here. Check one more thing out, right? Let's go to this 4 hour. I want to see how this opened. Yeah, hidden bear, man. Hidden bear. You can see the higher high here from where it was crossing the zero mean. I said this the other day. You can use the crosses on the zero mean as points of divergence. And if you really think about it, makes total sense. We all know what happens when that returns oscillator is crossing down or crossing up the zero mean. Let me see here. Just seeing, where's that 33 power mean? About 409.8, huh? 409.8. Yeah, it's like right at this weekly support level right here. Literally right below the 1SD. Right below the 1SD. And I do see this thing coming down, but what's the dollar doing, right? What's the dollar doing? It's hanging up around the first standard deviation, trying to find support on the top of the daily range. Dollar is super weak. We'll go into a couple Forex pairs too. We'll check out pound and euro. See what's going on there. Yes, we will. But so when you do a pre-market move like this below the first support level on the daily, this is automatic resistance. This is automatically resistance here. That's how these volatility ranges set up. And this is how I use this when I'm determining, like, what do I want to do in the morning? Just like yesterday, now you could front run maybe. You could buy a, I don't know, 412, 413 call or something, just ride it out. But I'm telling you, if that position were to turn against me, I'd get out of the trade immediately. Doesn't matter if I'm trading futures, trading intraday options, I don't care. I'm not gonna let the market take money from me. You might lose a little bit, It's a lot better than losing it all, right? And when I'm trading 0 DTE options, I'm buying premium. There's no doubt about it. In my opinion, only way to do it. Maybe unless you're, I mean, you could sell a butterfly. I don't know. There's a few different things you could do, but I like buying premium. Why? Because, man, these 0 DTEs, when it starts moving, they are injecting and sucking premium out so fast. You take your profits quick. Hold on here. There we go. Got logged out of my account. That's okay. So let's see here real quick. Let me pull that up. Where's the expected move today? So the expected move, BTC got it almost the same as yesterday. 412.5 to the top and about 409.5 to the bottom. All right, 409.5 to the bottom. Where's that at? It's literally right at that weekly level. A little bit below, actually. Right in this area right here. And then we got 412.5 probably at the weekly. Yeah, so there's the expected move range. About the center of the weekly and the first weekly support level. And that is the second support level on the daily. So if I'm playing this safe right now, I'm waiting for this data set to come down to the 1SD. Then I'm going to reevaluate. And if we get a wick down to this first support level, then I'd probably feel safe and probably getting into a position on a call up here. We'll see, though. You got to watch the dollar. I'm telling you, that's why I got them right next to each other. You got to see what the dollar's doing. I want to see what the dollar does at the 1SD. Hasn't got here quite yet. Looking like it wants to make a run at it. Then you got the weekly volatility range right here. A lot of overhead resistance for the dollar. What's new? That's why it's so weak. That's why it's dumped out. And I read an article this morning. Oh, dollar. What did it damn say? It was stupid. It's probably gone already. Where's it at? Yeah, dollar index edges higher after 3 down days. I don't know what the hell they're looking at. What are you talking about? I mean, this thing's still down. What are they talking about? The bounce before the close yesterday? I mean, you're down here at the third, fourth. Is that the fourth support level? It is. Fourth support level of yesterday's daily volatility range. Of course, it's going to kick up from there. If they only knew. They only knew. I don't know what the hell these guys are looking at, but it's okay. It's okay. So dollar almost at the 1SD. Almost at the 1SD. With the SPY data set almost at the 1SD to the bottom side. It's usually what you're going to see. That was also a no-brainer what was going to happen pre-market. When you got a dollar right before the market opens sitting above the weekly range. We saw the bear div setting up on yesterday's close on the 15-minute chart. Holding the data set down right now, especially. These bears, they're sitting right there. They are sitting right there. It's gonna take some low time frame trend to literally get back up in this 68.3 Laplace distribution range. Mark my words on low time frames. If you see you see SPY come down here to the 1SD or the first support level on the weekly, and then from there it starts moving to the top side, you're probably going to see the 15-minute, 9-minute, 6-minute all trending to the top side. This is why we trade low time frame volatility, and that entropy indicator has a lot to do with the trades. Don't you want to know in the volatility, especially because we know how volatility works, right? Usually on pumps and dumps starts with a walk up or a walk down, right? The volatility will ebb and flow into a pump. When we're getting ready to get a pump on Bitcoin, the very high probability of the time, you're going to see the volatility contracting, negatively correlating, right? With the price action, like low time frames, candle by candle, just walking up, just stair stepping until that volatility is almost all the way contracted. Sometimes it doesn't fully contract, but if it goes into full contraction, then it's usually when you get an expansion in volatility, 9 out of 10 times, that's a pretty high damn probability. You are going to expand, and the correlation is going to break positively correlated. So that's when you get the moves on Bitcoin. They usually start with a walk up and then a pump. Just like dumps, they start with a walk down and then an expansion negatively correlated. That's how the volatility works. Now, every once in a while, just out of the blue, you will just see straight up volatility expansion, bam. One positively or negatively correlated, and you just get an immediate dump. right? There's no walk up or walk down to make you aware of what's going on. But this is where the entropy really plays a huge part in knowing when you're trending on these low time frames. All right. And then you got to be able to have, it's like when I'm actively trading, I'm not hitting multiple tabs. I'm not wasting that time of going to, oh, what's here? Right? No, what's going on over here? They're up. All my monitors are firing, right? All my monitors are firing, right? Information. You have to have the information up in front of you. Speed. What, you're just going to be flipping through tabs? How's that efficient? It's not efficient at all. It's not efficient at all. And then size. We talk about it all the time. Small sizes, spread the risk. Everybody wants to get, if we're talking about options, there is a built-in inherent risk of leverage. If you don't know how options work, one lot's 100 shares of stock. Now it's different with these indexes, obviously, right? You're not buying shares of stock. But I'll tell you what, people, the times when people get wrecked intraday is when they're greedy. When they're greedy. I'll never go more than, especially if I'm trading intraday or a couple day out expiration stocks, and if I'm very bullish or bearish, I'm not going to go over 5 lots. And that's playing with fire. That's 500 shares of stock. Do you understand? The stock has a huge move. What that you'll wreck yourself, man. You can really wreck your account. And that's another reason. If I'm not buying far out when I'm selling premium, it strangles 45 days out, 60 days out. When the lower expirations, week in of that nature, yeah, it's not like that at all, man. It's not like that at all. I'm buying premium most of the times. I'm buying premium, and most of the times I will be out of the trade in a couple days. If I'm a week out on an expiration and I get into 50% profit, and that's what I'm looking for too. And I'm setting up trades. I'm looking at the probability of profit and the probability of getting 50% of that profit. And I'm looking for trades that are like 70% profit, 90% that I'll get 50% of that profit. You think I'm going to take it when I hit 50%? Of course I am. I'm just going to take it, get out of the trade. It is an absolute no-brainer. All right, let's see here. Dollar's making a move right now. Pretty surprised that we don't see SPY down here. Yep, see everything else kind of dumping out, especially Coinbase. Woo! Ugly Coinbase. Man, how'd it drop? Coinbase back down to 50. What's it at right now? A little under 55. Wow, there'll be a trade coming in here real soon. I'm going to watch this. I'd love to get this down here about 50 again. Looking to the nice options trade on Coinbase. Yes, sir. Okay. Yeah, this is taking some patience this morning. And I don't lie. I would definitely, looking what the dollar's doing right now, I'm not interested in buying any calls right now. And you're in no man's land down here. I mean, you're stuck between the 1 SD and the first support level on the daily. There's not a trader. This is pretty much just like yesterday. I'm being patient. I'm waiting to see what happens, right? There's a morning and an afternoon session, man. I don't have to be greedy. I don't even have to be in a trade in the morning. The afternoon sessions are a lot easier, right? You have an established data set already. Your indicators are firing on all cylinders. You're building divergences on the low time frames. The moves that are eventually going to happen, you can see it in the charts, right? You can see it in the charts because we don't use lagging indicators. Sometimes people, that use traditional TA, they get a little bent. Look, you can trade however you want. We're here for you. Right? If you're looking for a new way, if you want to see how the high frequency trading firm algorithms trade, how they are programmed, they're programmed with math. They're programmed with probabilities. You can believe it or not. It doesn't matter to us. The proof's in the pudding. We know the algos run the distribution. That's why these areas hit. That's why the distribution levels hit. The algos are the ones that are pushing these data sets around, man. Everybody, oh, well, the retail trader sell-off. Guys, give me a break. Retail traders do not move these markets. And you can get some FOMO moves like you had on Bitcoin, but you know what's really pushing the markets, right? The big liquidity players, man, not the retail traders. That's how that's shaping up. So patient time. I'm going to have to really just, I want to see if we reject her off the 1 SD. like the dollar does. So what do we do there? Let's throw Dixie on the charts. Low time frames. Let's first go to the 15-minute. Yeah, this, look at the returns oscillator setting up hidden, right? There's several back here. 1, 2, 3. Right, you got a higher high right now on the returns oscillator. Nothing set in stone, right? This has not turned down. And this is a 4-hour. You're not going to see it probably turn in. This would have to dump out super fast to see this on the 4-hour turn down during this current candle. All the fissures are up, and they look strong, to be honest. Not going to lie, but when you have higher high on the returns oscillator, all these lower highs down here. Now look, where's the data set on the dollar right now? So you dump outside the power mean band. You're going back up to test the wave trend. You're at it right now. So does it reject now? I'll tell you what, this is a lower high if it does. Highs, lower high. Exact opposite on the returns oscillator. That's hidden bear divergence. Blow this up. See how close it really is. Yeah, I mean, literally moving right to it. It's at 101.725. Yeah, it's at it right now. It's at it right now, and it's looking like it's one, because these weekly ranges are magnets. I'm a little shocked it's probably going to get up there the way it's looking, and you've got a 4-hour second standard deviation right here, right? Just went through the first standard deviation. That's that little blue line there. There's the second standard deviation right at the bottom of the weekly range. So do you think the dollar bears are sitting here waiting at the bottom of the weekly range? Absolutely they are. And you've got a 95.4% probability level on this 4-hour candle. You think that's strong overhead resistance? When we're talking about probabilities and volatility ranges, it absolutely is. I'm not saying it can't go through here. I'm just saying there's a 95.4% chance during this 4-hour candle that it doesn't close. Now I'm talking about a 4-hour candle, not a 15-minute. That's why during this 4-hour candle, you see it get above that 2SD. There's a 95.4% chance by that 4-hour close that 15-minute data set is back down below that area. Does that make sense? That's why I use a 15-minute chart. Another reason, and people asked me before, why don't you use the BRE with a 1-minute chart or a 5-minute chart? I use it a 15-minute chart because I trust the 15-minute time frame, that when you start to close 15-minute candles below or above distribution levels or volatility ranges, I feel a lot safer that that's a solid move. Does that make sense? Where 5-minute candles, ooh, in a random market, especially in low time frames where the algos are just feeding, all right, it's a shark tank down there. It really is. If you've ever scalped low time frame volatility, you will immediately recognize the players you're playing with. They are not human. They are bots. That's who you're down there trading with. I like to say, think of it as just a big tank, right? A big tank, and there's huge mechanical great white sharks swimming around, eating retail traders, eating up hedge fund algos, right? This is why hedge funds get gobbled up every day and get liquidated. Does that even make sense at all? Hedge fund. How the hell did you liquidate your hedge fund? You're supposed to know what you're doing. Apparently you don't. Why? Why do these guys get liquidated? Leverage. It's always leverage. Let me open this door. Come on in, dog. Come on, girl. Get up here.
Like, let's just be realistic and look at a time frame on the 1 day. All right, so like from December, from January 1st, right? So from January 1st, Bitcoin went from 16 grand, 16 and a half.
He said the daily.
To 31K. All right. Now, that's just the first quarter of Bitcoin this year. That was a 86%, if you picture that. Like 86%.
It's 100% move. You went 32, yeah.
Right. So like if you're using leverage in something like this, to me it's just it's unreasonable, because if you can get it right in the first quarter, you have literally beaten. You don't have to trade for literally the next 3 years, and you've beaten the best funds on Wall Street. They do like 30%. Some guys can do 60% a year, right? And it's like most of them are trying to get above like 5% above whatever S&P is going to give you, right? And you give them some money back because they managed your fees. So like maybe they beat the market by 3%. Like who gives a shit? You could literally do that without leverage in the first 3 quarters of Bitcoin this year. And if you want to leverage against that, man, it's like, as if your money comes quick, well, then expect it to go even faster. That's how I look at it. So if you're playing the leverage game, then you're looking to get burnt. But I mean, 85%, who's going to complain with 85%? You've beaten whole hedge funds for like 7-8 years in the first 4 months.
Yep.
It's anyway, so I just thought I should just share that because it's a really big move. I mean, no one's really saying it. It's 85%. We just think it's 16 to 30. You know, if it was at like 15, it did get to 15. It's literally
15 at the low, and it was like more than 31, 32 at the high. So it's 100% move.
It's nuts. 97%. Like, come on. You know?
All right.
And so this is for everyone that's like drawing on their charts, right? Throwing trend lines on, throwing trend lines. Do you realize that you're throwing trend lines on a distribution? Now let me erase that trend line. That was for shits and giggles. So when people are drawing trend lines, is what they're not realizing is that you're hitting a 95.4%, or that's a 99.7% probability level. And right when you get to there, when everybody's like, hey man, we break this trend line, we're going to go to the top side again. It's like, well, little do you know, there's a 95.4% chance that wasn't going to happen. Instead, what was even more of the probability to go sideways and reacquire the 95.4? That's exactly what it did. There was a 95.4% chance it gets back in this range right here, right? And so there's a 95.4% chance on this projection the data set stays in between 29.2 and about 14.6, massive range, right? This is a 2-day chart. But this just shows the power of the probabilities, right? You run a data set up into this range, the probabilities take an effect, man. That's all it is. Let me see the 3-day. Yep, same on the 3-day. Reacquired it. Boom, 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 boom. Let's see about the weekly. Yeah, I mean, that's a no-brainer. I mean, you immediately on that weekly candle, you shot outside the 95.4 Laplace, pulled right back inside, rejected right there. Rejected right there. So could this thing go lower? Sure it can. Sure it can. I mean, this thing's in a random walk. It can do whatever the hell it wants. What are the algos doing? And this is why we trade low time frame volatility, right? Could you have been sitting in these big moves? Sure you could, but you know how many moves on low time frames are in a weekly candle? Ridiculous amount of moves. We do not swing trade volatility here. It's a big no-no. A big no-no. I'm going to throw this on. Let me see here. Where are you? Whoops. Put this on the daily. Move it forward real quick. There we go. Now 4 hour. Come on back, Jack. There you are. And there it is. Whoops. See how low this got on the 4 hour? Yep, staying inside the 99.7. All those people drawing trend lines. Let me see. So there's a 95.4% chance we'll see 28K here at some point on this projection anyway. Going sideways like this. But then again, right, we could drop back down to the 99.7. I mean, that's down to 26K. 26K. I see a lot of people calling for 25K. What are they looking at? They're looking at data sets, obviously. Silly peoples. Looking at data sets. Where's 25K? Oh, of course. Of course it's right there.
These people just saying silly targets for no reason.
It's like, well, yeah, knock yourself out. This is why these areas just get blasted. And I'm sure people right now are going, oh, the head and shoulders played out. Patterns are ridiculous, man. Patterns are ridiculous. People say, oh, it's a pattern that created the dump. It's like, do you know what's creating these? Do you know what's creating all this? People are like, well, yeah, it's the volume. It's like, wow. No, it's volatility. Volatility creates volume, right? And volatility, you're seeing it in the data set. Got nothing to do with patterns. That's why when people are drawing on their charts, they have no idea what they're even doing. This is a Fugazi. That's all this is, man. Price action follows returns. That's all it's doing. When you understand the returns, you'll understand the data set a lot better. A lot better. All right, let's turn this UPM on. But then again, right, we're outside the power mean band. I am at some point waiting. I mean, you got the 33 log MA getting ready to cross down the wave trend. That's usually a magnet for price action. That 33 is a powerful log MA, and so is the reverse wave trend. Did we get a pump out of here over 28? Good. Good. It's a probability. It's definitely a probability. Definitely a probability. And we got this long-term time series, bull div setting up. You can see, look at the returns oscillator. It's just hanging out on the top of the zero mean, just sideways, taking a rest, right? Powerful little 4-hour move to the downside. Powerful 4-hour move. But then again, when you see a data set at the bottom of the freaking power mean band, what is the probability? What's that telling you? There's probabilities in everything. When I'm seeing something at the bottom of the power mean band, there's a probability this thing can go to the top side of it and definitely test the wave trend. We see it time after time after time after time after time again. I don't care what time frame. On a 1-minute time frame, you get outside the power mean band. It's going to come back and test up on that wave trend, if not the bottom of the power mean band altogether. Let's let this populate on the 1 minute. See if we can show you some examples here. And you're going to see it a lot more on these low time frames, obviously, right? Don't you think you're going to see these moves a lot more on a 1 minute than you are on a daily? Yeah. You can see outside the power mean band, boom, went up to test. Outside the power mean band, went up to test a wave trend. Now here you are in the 1 minute, dicking around down here. What are you doing, Bitcoin? Oh my God. No div, clean chart. If you ever hear me say clean chart, there is no divergence between price action and returns. There is none. None. And if you're watching on TradingView, hit the rocket icon for us. Help this video get out to more people. Got nice. Got like 135 views on yesterday's. And that's what we're here for, right? You'll notice immediately one thing about alpha trading. Look in our descriptions. Go to our web. Do whatever. Go to YouTube. That's how I judge somebody. We are not trying to extract money out of our community. Period. The end. We have a free trial, things of that nature. We do not charge for education, right? And the very friendly people in the Discord. We're here to help people, not extract money for them. We're actually trying to help people make money. That's what we're doing. It's never financial advice. I am telling you how I trade volatility, right? I'm telling you when I would take profit, when I would enter a trade. And if you've been watching for a long time, you'll start to notice, man, is there something to this stuff? How are these guys always right? It's not that we're always right. It's that a high probability of the time we're right, where you're never going to be right 100% of the time. These markets are tricky. Anybody that's been trading these markets knows how tricky this stuff is, right? And that's why I just know for a fact that people that are making money using traditional TA, if you're lucky enough to get a good entry, because it's hard using lagging indicators to get a good entry. People come up with all kinds of wild, different little strategies to be able to get an entry using traditional TA. For God's sakes, I was using like 3 different RSIs at different lengths, volatility bands. There was a bunch of different ways. But it becomes so much more easier when you're looking at the returns. When you understand price actions following returns. Once I figured that out, I was like, there's no looking back. I took all that traditional TA, boxed it up, whoop, threw it in the trash. Never looked back. The only time I ever pull up an RSI is just to show divergence plays on the return oscillator that about 90% of the time the RSI does not pick up. Why? It's a lagging indicator built on price. Price doesn't follow price, man. Why are you looking? This is the biggest problem. People don't know what divergence is. It's an imbalance in the buy and sell pressure. Okay? And when you have an imbalance in the buy and sell pressure, what's creating? It's the returns, man. Right? It's literally when you start to see divergence set up between returns and price action, it is literally an alarm going off saying the return on your investment is diminishing. Take your profit. And when you see that div setting up, what am I doing? I'm looking at the volatility immediately. Is it a move to the top side or the downside? Has volatility spiked at 100 percentile? Is grade with it? What's going on with the other two lengths? Are we trending? Are we in a random walk? All this works together. This is a entry and taking profit machine. You use this chart with the VRE and the distribution levels, crying out loud. And what happened? There we are. Got a wick right to the 1SD as soon as I turn my back on SPY. Now, look what's going. Yeah, you little tricky devil. Look, you got the dollar. Is it going to reject off the 1SD? That as soon as that tapped, it's at 409. Let me go over into the brokerage account here. So now, where's the bottom of the weekly? What is it up there? 412. What are the 412 calls right now? Woohoo! I bet they were a lot cheaper a minute ago. They're 42 cents. 413. Is that in the weekly?
Something just came out, some sort of news.
Any news? The 413.
Well, it's 10 o'clock. Something was released because it just, had a 10 point on the futures.
Yeah. You could have got a good entry down there. I mean, I literally said it before the stream. That's what I was waiting for. That's where I would have got my entry.
So the options traded from 60 cents to $1.10 on the what am I looking at here? The 410s.
Oh yeah. Oh geez, they're $1.30.
Yeah, I mean, look at the moves.
Yeah. Yep.
Yeah, you can't really count this, man. Yeah.
But that's definitely in an area right there where I would have definitely taken a chance, just because I see the dollar up here at the 1SD. We did hit the 1SD right here. I know where the expected move is at for the day. The expected move got hit. It was actually with that volatility, it's right at 409. It is right at 409 to the downside, and that's what I said before. Right, 409 to the downside. That might be it. Yeah, it's in between these two support levels on the daily. In between, if you would have been waiting for this and got an entry on like a 412 or something, that would have been some instant profit at the top of this wick. I mean, that thing jumped like 20 cents, 30 cents. Interesting indeed. So now we just got to let this play out. But definitely did exactly what I thought it was going to do. Literally said it, waiting for it to drop to the 1SD. There it is. Algo's waiting right there. And that's the thing. When you get down to a 1SD to the downside, that's usually where the algos are going to take profit. All right. Boom. Did they? Yeah. Indeed. Took a little profit down there, and then boom. Is it going to bounce now? Is it going to bounce? That's where you're looking at low time frames. Seeing. I mean, there's the 1 minute. Look at the 1 minute, right? Boom. Didn't close that 1 minute candle above wave trend, then just dumped right back out. And that's Bitcoin, though. Jesus, where's SPY at? There we go. On Z1 minutes. Yeah, look, it was setting up bull div whole time. Setting up bull div the whole time from the open. Bam, and it just boop, popped. I want to see this UPM populate here. Come on, baby. There we go. Yeah, I made a run into wave trend. Yeah, this thing hasn't hit yet, and that's at 411. 411 is the wave trend. Top side of the power mean band up here at about 411.2. Bump on the 15 here. Nice outlier. Gotta love the variance indicator. Gotta love it. What is variance? This is the most simple indicator we have to read. Right? Variance is merely just the spread of data around the mean. Right? The standard deviation of returns is volatility. Right? So when you correlate variance to price action, it gives you direction. And our variance is letting you know when there's a fat tail event. Fat tail event is a second standard deviation move or greater within the distribution. Powerful moves. Lots of outliers, low time frame. Yeah, man. Good stuff. And right now on the 15, right, this thing is way below reverse wave trend. Didn't pop back up yet, but now it's pulling back, right? It's pulling back. And this is one of those instances where if I would have If I would have jumped in this trade, I'm being patient. What am I looking for? If this 15-minute candle, right, were to close below the 1 SD where I got my entry, I am out. I am out. And even that being said, what time frame did I get my entry on? Let's say a 6-minute. If one 6-minute candle closed below that area, I am out of the trade. I don't care if it was just a wick down there, right? And why are you getting wicks like that? Because people actually put stop losses into the exchange. Bad idea. Bad idea. YouTube Jimmy out there is going to be teaching you the poorest risk management strategies known to man, right? The poorest. Okay, you sit down at the poker table. Are you showing people your hole cards? Of course you're not. You're going to walk out of the casino broke and busted. You're going to be on the street corner with all the other panhandlers in Tahoe that lost all their money. What's that?
I said in hookers.
And hookers, whatever.
Oh, I thought you were talking about street corners. I'm sorry.
Whoop! Exit stage left.
Yeah.
Hilarious. But yeah, you don't put stop losses in the system. If you're a professional trader and you're literally not sitting at your desk in the morning session, the afternoon session, if I make enough in the morning session, I'm at the club in the afternoon playing golf. There's no doubt about it. So this is the situation. As soon as you throw a stop loss in a system, you're raising your hand. Here I am. Here I am right here. Come get me. Don't think all these exchanges have algos running to see the amount of leverage people are using, to see if they're putting take profit trades in, stop losses in the system. This is why people's take profits get front ran. This is why stop losses get hunted. I mean, people, and they talk about it. Oh, look, another stop loss hunt. Oh, well, I'm going to get in this trade. Now, where should I put my stop loss this time? It's like, did you not just get hit over the head with that freaking frying pan? And you're going to go and do it again? This is what people do, man. They don't learn their lesson. And they wonder why they continually get knocked out of positions. Sometimes good positions, right? But when you get a mass group of people putting stop losses in the same area, crypto's the worst about this because they are literally trading against you. It's out in the open now. We've been talking about it for years. Don't leave your money on these exchanges. Don't put stop losses in the system. Don't put your take profits in the system. The only time you ever want to put a take profit in is when the volatility has got a hold of the data set and the volatility is expanding. I don't care who they are. You can't stop volatility, man. You can't stop an outlier. An outlier is an outlier. It's telling you, look, we're going to have a fat tail event. Let's party. Let's party. Get out the stripper pole. It's time to get down. So that's how we do it here, right? And being a professional trader, you are monitoring your positions. You're scalping low time frame volatility. You're scalping the intraday options. Whatever your gig is, you like futures, right? Whatever. You like the minis. You like the micros. Whatever, man. Trade away. Trade away. It's really, the 0 DTE SPY options are a blast. You get down this trading system, and it's fun, man. Especially if you limit your losses. This is where people go wrong. I hear it all the time. Well, I do win a lot of trades, but it's those couple trades I lose that get away from me that I don't get out of. And the amount of money I lose on 2 trades eats up all the profit on the ones I made. That happens all the time. Just think, if you just limit your losses. Like I said, if I was in this trade right now, and a 6-minute candle closes below that 1 SD, even with the support, but this is the thing. You get a wick, you get a candle down. Wait a minute. You get a candle down to that weekly support level right there. There is a high probability that's going to be a wick by the close of the candle, and that candle will close above the 1 SD again. Why? Well, there's a 68.3% chance the data set on the daily is going to. That's why these 15-minute candles can get below. But usually when you get a wick down to the weekly, it's going to pull up and close above that 1 SD. We're probably going to get a good look at it right now. And then I'm out of the trade. I'm out of the trade. That's how you limit your losses. And you're not emotionally attached to the trade. So it's like, boom, okay, I'm out of that trade. I'm going to go refill my coffee. I'm going to get right back on the desk, look for the next occurrence. right? Wasn't a good entry, right? SPY rejected. Now it's running. This is tricky. You got the bottom of the weekly right here. The bears are sitting here just waiting. They are waiting at the bottom of the weekly range. If SPY gets above this weekly, guarantee you low time frames, it was expanding volatility in trend, right? You're not going to get up through here with a weak move because the algos are waiting right here. These are the battle lines. And right now, this is trench warfare. You got the weekly here, the daily here. You got this big zone, not big, and you're literally straddling the first standard deviation. Think of this as, hey, you cross this line, I'm blowing your head off. Right? The trench warfare right here, man. Bottom of the weekly. The what?
You got time to look at one quick. Look at Starbucks. Wait for immediate shot.
Starbucks.
Might be a little outshot to it right here.
Let's see. I got it in here somewhere. Where are you? Bucks.
Look at the 108 puts right now.
Where are you? I thought I had it on here, man. Seriously? There it is. Bucks. Oh, yeah? Oh, nice. Would they get a new woke poster in every, I'm sorry. Shouldn't have went there.
Gender neutral coffee, man.
Jesus.
I'm just kidding.
I'm not. This country's jacked up right now. So ridiculous. I talk about it all the time, dude. It's like, look, man, I don't care what you do. You start pushing it on the kids, though, you're going to wake me up. And I don't even have children. I got nephews and nieces, though. Don't push that madness on the children, man. That's when I get involved. Okay, so on this 15-minute candle, Starbucks hit the 99.7 Laplace distribution, right? There's a 99.7% chance you walk in any Starbucks, you're going to get the same taste in coffee too, right? It's always the same. I've been to a lot of different ones. I do not buy their coffee anymore. They went way to one side. And I'm just like, yeah, I can't support that action. But anyway, it is good coffee. You know you're going to get the same thing every time. Why is Starbucks pumping? Let's see, man. Let's see. What are we talking about here? We're not going to see it on the 15. Where's this bull div on the daily? Or hidden? Clean chart, huh? Oh, getting all sneaky. This thing's clean. Now, if we're talking about this point up here, I mean, there was the first point of bear div. Did it play out? A little bit. If that would have been positively correlated, man, you would have seen Starbucks back where wave trend probably. It bounced off top side of the power mean band, and the 9 log MA is what it did. And it's clean right now. Just locally, no div at all. Let me see the 4 hour. Nope. Clean. Starbucks is on a run here. Got volatility contracting negatively correlated. That can ebb and flow right into a pump as look where the predictor flip. Now, mark my words, man. It's 4 hour. If this contracts fully, right, during this candle, and then you see an expansion and the correlation break positive, you're going to start to see this drop in the trend. You'll probably see this drop in the trend. But look at the returns oscillator. There's no div though. Chances are is what you're going to see here's a little sideways action as their returns make their way back to the zero mean. Right? Look, negatively correlated right now. That's telling me right now the move's probably about over. And look at the cross. Man, this is a magnet right here. Look for Starbucks. What is this, a 4 hour? Let's see, where's this going to rise to? 105, 106. Probably going to revisit. Now, it doesn't have to, but these crosses, when you get the reverse wave trend crossing a reverse Fisher, that's a magnet for data sets. Magnet. Let's see here. Old Starbucks making a move. Interesting. Having an outlier. Here's the outlier I'm talking about. And so is what you do. If you want to see how this works, that's where I would have started the projection right there. I'm going to show you what a fat tail is. Let's have a little class. There we go. Take this projection, boss. One candle after that bearish one. Bam. I mean, the fat tail event has been acquired. There's the 95.4% range, right? Data set. Boop, 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 boop. The variance right there is telling you when that variance turned pink, you're having an outlier. Man, it charged right up too. Charged right up. Almost got to it right there, but pulled back. That's why that outlier continued. Now you're there. You are at the 95.4. But the 99.7, it's fat tail, right? This can go above here. There's no doubt about it. Let me go down onto the 90 minutes, see if this thing's trending or something. That's what I'm looking for, some trend. Where's the trend, friend? Probably on the 9:45, 90. Yep, 90 minute. Expanding volatility, positively correlated. Look at the outlier on the 90 minute.
Well, I'm looking at this to mean revert. That's why I'm looking at 108s.
Looking at the 108s. Well, let's see here. Let's put Starbucks on the old RMLR. Where you at, S-Bucks? Where you should be with the S's. Yep, imagine that. Okay, Starbucks. Daily, no, 4 hour. Let's turn off the... Let's turn off the low length. There's the, interesting. Yeah, Starbucks here on the 4 hour. I mean, you're crossing the RMLR right now.
I thought you had a third standard deviation, didn't you? I know.
Where is... And man, I think could be running to 30. That was up here at the 2SD or the third standard deviation, 111. Yeah, I don't see it. Let me see here. What time frame you looking at?
I guess I was looking at 15 minute when I saw it hit that. You know what I mean? So.
Yeah, I mean, look, you're up here beating around the top side of the volatility bands for sure. Yeah. Let's see where this 30 power mean populates. And we're waiting. Okay, you can see, man, all these candles closed right at the second standard deviation. That was a little higher, right? Look at all these. There's the 2SD dot, right, on the current candle, right at the second standard deviation band. 2SD, let me see here. Where's that baby at? Yeah, right there, right above it. So it did close. It closed right at the 2SD there. Look at this last 4 hour candle. This is what I love to show people. They just don't even understand what the distribution is. Oh, you don't know what you're talking about. What? Math? Probabilities? What is there to know? All you gotta do is learn, because math is real, man. Look at this. You open up this candle. This thing literally, pumps first up to where? That little blue dot, wick right to it. That's a second standard deviation to the, or no, that's actually a first standard deviation to the top side. Then it dumps out. What's that pink dot right there in that blue dot? That's the second standard deviation in the 95 Laplace distribution range to the downside. Yeah, for sure. And you're up here beating around the 2SD band. Even made a run outside the 99.7 Laplace on that last 15-minute candle. Got the RMLR down here at about 109.6, 30 power mean, 108.63. It's even lower on the 9 minute. Yeah, on the 9 minute, you were tapping the 3SD band up here. We know what happens. I mean, can it go higher? Sure, it can, but there's a probability this thing's going to mean revert. That's what a P-Funk's talking about. I would have probably been more on maybe the 109s or something. But yeah, it's good. He knows what he's doing.
I appreciate you looking. Thanks.
Yep.
Just throwing out an idea.
He knows what he's doing. Yeah, bro. Let's see. Let's see if anything's sticking out here. Got any?
Hey, can we look at the Microsoft and Google earnings situation?
Yes,
later?
yes.
Did they already do it today, or they got a report today or yesterday?
Today it closed.
This afternoon after close.
This afternoon. Okay.
Yeah, we're definitely gonna. Let me see. Where you at, Google? Let's check Google out first. Goog. There you are. Goog. Your algorithm can go. Wow. What is this? God, this is a 9 minute, huh? Yeah, this is the Google right now. Probably on the way to about 106.5 is what it's looking like. Doesn't have to, but man, look at the wicks. Look at the wicks through the 2SD band. It's like, no. Let me go to the 4 hour. This will give me a better idea. Oof, scale that down a little bit. Yeah, scale this correctly. Bring this back into, it's barely holding on to the 30 power mean right now. So we're coming all the way back down to the RMLR. Mean revert on this 7 or on this 11 length, possibly 105.27. Let's see if this 4-hour candle closes below the power mean. If it does, that's probably a no-brainer. Where's the 30? Up above, made a run to it. No, let me see the daily. Let's see the daily. Ah, so tough. Now, this would be an easy play. You know, what if the Goog data set was down here right now by like the 3SD to the downside, 3SD to the top side? Easy earnings plays. Because what's happening? Yeah, it's earnings, but returns mean revert. And you're usually going to have a setup before that earnings comes out. This is tricky right now on Google. You're at the 1SD band, but it's for whatever looking like it wants to pull back. All right, we got to get over here. Google, let's load you up. We did look at it yesterday. Yeah, no div. If anything, right now it's setting up hidden bull. On the 4 hour, or on the, what am I on, 90 minute? At the 4 hour. Let's see here real quick. Got a higher high right there? Not really. No bear div. It is crossing the zero mean right now, though. On some weak bear div. No correlation.
DLP.
No correlation. Yeah, look at it, man. This thing is flat. A lot of stuff. Z-score going sideways. Volatility's totally crushed. This makes sense. I mean, we're literally what? About 6 hours from earnings, probably. Volatility crushed on the 4 hour. Of course it is. Of course it is. You can see how it was contracting right here, and it walked up. But then the correlation broke on the final contraction, so you get a candle down. So we're going to get an expansion here. We're going to get an expansion in volatility, positively correlated. As we're setting up, are we setting up some hidden? We are setting up some hidden a little bit. Of course, the fishers are right at the mean of the bands. Total random walk. This is exactly calm before the storm. Calm before the storm right now. So there's the bear div, right? It's on the 33-minute time frame. Get a higher high data set, right? Lower high right here. As soon as it crosses the zero mean, you get the pullback. Bam. See, the returns started mean reverting. Returns start to mean revert. Then it crosses the zero mean to the downside. Price action is like, oh, okay, boom. Let's follow the returns. Z-score returns had an outlier into almost in the 99% confidence interval. So you go from bear div. Now what is setting up? Boy, if this candle pulls up and closes pretty much right around where it opened, create a doji, that's going to set up what? Hidden bull. Hidden bull. You can go right from bear div into hidden bull. All the fishers are down though. Random walk on the 33 too. Yeah, there we go. Look at that little, there's a record right there in the 33-minute. Sent a wick up right to the 2SD band, knocked some people probably out of their positions, and continuation. Contracting, positively correlated, having an outlier. Yeah. This move possibly to the downside isn't done yet. Here's what we really need to do. All right, Tesla, you're going to have to step aside. We need to look at Google. Oh, Goog. Throw it up on the VRE. Wow. Above the weekly. Okay. This is beautiful, actually. Let me give this its own play here. Whoops. Yeah, what am I doing? Oh, yeah. Jesus. Boom. I want to get a better look. Let me throw Google on. There you are. Okay. Oh, yeah?
That Dixie's nuts.
Oh, yeah? What's Dixie doing? Going up. Jesus. All right. So you can see what happened yesterday, right? Pre-market Google pumps. Where did it reject from? That is the top side of the 68.3% probability level of the Laplace distribution. Rejected there. Pulled back, pumped back up to it, reject. Where to? Top side of the weekly range. Yesterday was a tight daily range, literally telling you Google was going to trend. It was all over the place on low time frames. Trend top side, the bottom side, top side. Then it closes right here. Look at today. Yeah, you think earnings are coming? Look at this wick. You literally get a wick to the first resistance level on the weekly, and then a wick right to the bottom side of the 68.3. All right, then it pulls back up. Crazy looking data set right now. But considering the weekly range is right here, and you got a daily above a weekly, this is starting to turn my earnings play to the top side. Starting to turn my earnings play to the top side. Where is the monthly range at? Hold on here. There it is. So, on Google. Hold up. Here is top side of the monthly range right here. This red cross line. So you got top side of the monthly, weekly, daily. This is bullish. This is what you want to see. You want to see weekly volatility ranges above the monthly and dailies above them. And that is set up. All the support is below. Now we'd have dropped below this daily range right here. But as we all know, especially right before earnings, the move that's usually happening is literally the counter trade will be the earnings, right? So if this thing dumps out going into close, I wouldn't be a bit surprised. You wake up in the morning and see this freaking thing up here, right? 110. Who knows? And I don't read the news. I could care less what's going on with the Google. Why? Because volatility creates everything. The news doesn't matter. Volatility creates news. And a lot of the times these people know this shit. This is how they are just manipulating traders into bad positions. And the organization that supposedly is there to help protect investors, which is a total joke. They're not there to protect investors, especially small ones. They're there to protect the wealthy. That's who they're to protect, and to make sure that the peasants don't make a lot of money in the markets. That's what they're there for. That's why these big banks just get slaps on the hands, right? Oh, so-and-so got fined, whatever, $30 million. Now they make that in 10 minutes. I mean, it's a joke, man. It's always monetary, right? The SEC wants their cut. That's right. I just said it. Called you out. The real criminals. They wear suits and ties. They're in D.C., right? They're in D.C. They're on Wall Street. They're in the big banks. These are the real criminals that are being protected by these organizations. Every three-letter organization you can think of, that's what they're there for, to protect the elite wealthy. They're not there for us. That's for damn sure. That's why you don't see these big corporations that have little tax foobars and whatnot. They just get little fines. They'll throw our asses in jail real quick. Yep, that's the way it works, unfortunately. So Google, look, you got me all out on Conspiracy Island. Let me see. Let me pop on. Where you at, Microsoft? Come on, show yourself.
This video is muted by the powers that be.
Hey, trying. There's Microsoft. Let's see what it looks like. Oof. Brrr. Microsoft. Ugly. Is this the top of the monthly? I do believe it is. Let me scale this down. Yep. Uh-oh. This is the exact opposite for Microsoft. The exact opposite, where here's the weekly. Look at the daily. Look how tight this daily range is. Look how tight. Is it trending already? Man, that thing pre-market dumped all the way down to the first support level on that daily, pumped up pumped up to the top of the monthly, and now it's selling back off. The volatility range is literally telling you this thing's going to trend. There's going to be a lot of volatility. This is the tale of two worlds right here between Google and Microsoft, where Google or Microsoft looks very bearish the way these volatility ranges are set up, or Google looks bullish. Just by looking at the VRE, let's see how this ages. I would probably say Microsoft earnings play to the downside, Google to the top side. All right, remember that. Microsoft to the downside, Google to the top side. That's just looking at the volatility ranges. I mean, we're going in, the daily distribution levels don't mean anything to me right now, right? I'm looking at volatility ranges, considering at the close of the day, you got earnings. The thing is, though, this has got room. I mean, here's the weekly. I mean, Microsoft could pump back up to the weekly. I want to see what happens close to the end of the day on both of these assets, because that could be the fake out, right? Get people in bad positions. That's what they want to do. There's a lot of people that are looking to get in positions, probably 2-3 day out expiration. Let me see Microsoft. What's the closest? 3 days. So on Microsoft, you got 3 days. So say this is why you want to wait. And I would probably be looking around a couple hours before the close, maybe 2 o'clock, maybe even 2:30. See where the data set's at. Because say if it's down here by the 1SD. All right, let me see here. I'm looking for the top of the center of the monthly. Come on, drag. My God. Let's go. There we go. Center of the monthly's at 274. 274, huh? Pricey. But hey, man, you're talking Microsoft. I mean, $279 stock. So this will not be cheap. If you're looking at like a 275 put or something to get into right now, the ask is 420. Imagine that. So what's that mean? It's $420, man. $420 make you freaking holla. Let me see. Right now, just dropped to 415. Right. Max loss, the premium you buy, $415. Max profit, $27,085. Right. But that's if it goes to zero. You think Microsoft's going to go zero on the earnings play? Highly doubt it. I'm looking for quick profit. If I'm in an earnings play, this is the nearest expiration I can get into, 3 days. Guarantee you, the next morning, I'm out of the trade. I'm either at a loss because I picked the wrong direction, or I'm going to take that profit. But chances are you're not going to lose all that premium, but you got to limit your losses, man. And before I close that trade, though, I'm going to reevaluate, look at the charts, because it is a 3-day expiration, to see if that down move was setting up any bull div. Maybe let it ride a little bit through the next day. But I'm not going to lose all that premium if that trade turned against me. There's no way. There's not a worse feeling. I don't care if it's 2 cents or 20 cents or $2. Doesn't matter. It's just a bad feeling when you know you could have got out of the position. But if it's a 3-day expiration, I'm probably going to give it a little leeway to see especially if there's div building on low time frames. All right. So yeah, like I said, Microsoft to the downside, Google to the top side. Let me see Google. See when's the nearest expiration? 3 days as well. That's the weekly. Let's see here. We can flip back on Google. There we go. Now, so we got the weekly. So what would I be looking for? I would probably, if I'm 3 days out, I would probably be looking at the maybe second or third resistance level on the weekly. Where's the third at? Because you know how these earnings plays can move, man. Oof. And earnings coming in tonight. So you got Wednesday, Thursday, Friday. I'm probably up here. I'm probably looking. Come on down. There it is. There's the top side of the weekly range. 110.62. So I'll be looking at a 110. 110 call. I'll tell you what, man. Oof, that ain't that bad. Those 110s are $1.09 right now. It's not bad. For about $109 right now, you could get a 110 Google call for the weekly expiration. But like I said, you get a nice earnings play. It could be at the top. And guys, it's only 4 points. Only 4 points. So you wake up, boom, you're taking your profit immediately. No reason to sit in that trade any longer. It's what's great about American options, right? American settled options. You can get out anytime. These poor guys in Europe. Whoa, I can't even imagine, man, trading European style options. You got to wait. You got to sit in expiration.
Yeah.
These are the guys that are
nuts.
Those are the people that are making the futures market go crazy, because that's all you can do. You can add legs on. You can add some legs onto the options position. But most of the times, these guys are going to buy or sell futures to protect themselves. They're going to hedge their positions. Instead, like a hedge fund or something, these just idiots, man. They use a lot of leverage, and that's why they get liquidated. It's crazy. Instead of, hey, why don't you hedge your position, right?
Yo, thanks for that. I've been actually pondering since I was like 18. How the heck? Because I learned that in like we had a trader economics dude was fucking sorry, the guy was an absolute legend trader, and he taught us. And he's like, yeah, just remember, there's like there's two option styles. There's an American option style, and then there's European option style. Don't do the European option style. And then I was like, why? He's like, because you can only settle it by expiration. And like those words were very big, settlement, expiration back then. It's like, okay, shit, didn't comprehend all of this. Yeah. Okay. Yeah. And then now I've always been thinking, like, now literally 10 years later, it's like, you would hedge it with futures. Like, it's logical to just go, yeah, like it's going against me, buy or sell, whichever to cover the direction for now. Yeah. It's that makes sense. Now I understand why there would be a need for a futures market. Because at the end of the day, it's like, oh, well, if there's an options market, why don't they just use options? But now that you've mentioned it, it's like, yeah, well, they're the makers in the futures market. Right. It's like, okay, I see this little trickle-down effect. Because I was thinking of trading Bitcoin options, and then I saw they had XRP.
But I don't think there's American and European style on Bitcoin options, unless you're on the CME. Okay. If you're playing those options on those off exchanges, they're whatever their own rules are. You know what I mean?
It'd be great. Okay. It'd be great to trade on CME, except you need 5. What is it? 5 Bitcoin, I think.
Yeah, you got to have Bitcoin Plus. They're super thin on the CME. Super thin. Yeah. So there's no volume.
Yeah. That's like the same on Tasty. Same on Tasty, but that's who they're using, CBOE. But it's just like, wow, super thin. I mean, it's just like there's no liquidity.
Huge spreads.
The liquidity, why? Durbit. Like 80% of the Bitcoin options volume is on Durbit. And they cuck U.S. traders. Well, of course they do.
So who knows? Whatever the rules are, they don't even have to follow any rules at Durbit, I'm sure. Mm-hmm. As far as American style or whatever.
This is typical. On the daily, Google, right? Daily volatility, crushed. Same with Microsoft, man. Same with Microsoft. Pre-earnings. It's calm before the storm. Calm before the storm. And look at Microsoft, right? The predictor's already flipped. It's already trying to drop out of a random walk. Correlation, low-length volatility has broke back here. It's already negative. You know, if we get this earnings play, now volatility expands. Where is it going to expand? Will the volatility expand with an earnings play? Yes, of course it's going to. So, and the volatility is going to be what moves, right? The volatility moves the data set, not the other way around. The price action doesn't create volatility. Volatility creates what? The return. The returns and price action follows. So it's a no-brainer that the volatility is low on both. And here's Microsoft on the daily. Look at all the higher highs. Have we had a big dump out yet? These are all little div plays, all these little pullbacks. Look, from the top of this data set, these are all higher highs, all lower highs. Now you're already below the zero mean, right? You're already below the zero mean. So this is, I always revert to the fishers at the end and what the volatility looks like. And you're already having an outlier. You're already having an outlier. Let me see on Google. No outlier, chilling. I'm telling you, I'm going to stick with what I said. Say, well, put your money where your mouth is. I told you, I'm waiting until about 2 o'clock. And then I'm gonna. then I'm going to put my money where my mouth is if everything stays the way it is. I'm definitely seeing Microsoft earnings play to the downside, Google to the top side. I don't need to know what the hell they're doing. I don't need to know. I don't need to know. I'm going to look at the VEPS. The VEPS are going to tell me everything. And it's just think back before. I mean, I'm sitting there every morning, watching the news. What's going on in trading world? What's going on with this, that, or the other? Take all that out. Dead. You got so much more time to just analyze the VEPS. This is all that matters. The returns. What are the returns doing? Is there divergence? When's price action going to follow? When it crosses the zero mean? I'll tell you what, if this was right now getting ready to cross, that's when I would probably up the ante too at 2 o'clock, man. I mean, I might get into, I said I'll never go over 5 lots. It might get it would be maxed out too. I'd probably go 5. If the returns oscillator was right here, getting ready to cross, and the earnings are tonight, volatility low, wow. All the fishers are down. But that's the thing. This data set can drop as the return oscillator is going back up. We know why, right? Price action follows returns. It doesn't have to follow it immediately. And most times it doesn't. It's waiting for zero mean crosses. It's waiting for zero mean crosses. If this returns oscillator on the daily starts making its way back up, that can be price action down. Look at the Z-score log returns. It's making its way down after an outlier into the upper confidence intervals. When you do that, when you get outliers into the top or the bottom, usually you're going to make your way back down. You're going to make your way back down every time. From the bottom, you make your way back up. Never had an outlier into the confidence interval. So this thing sat down and bounced around for a little while. But when you get that outlier, yeah, that's usually when you're going to turn around. Come all the way back. Indeed. Oh my God, 1040? Are we in a time warp? Let me see something before I forget. Do our boy a solid here. Let's look at his favorite. I'm coming for you, the Django. Oh yeah, Apto's selling off. I told you. I told you. All right.
I was just waiting.
Yeah, bro. Patience paid off. Let's see here. Yeah, man. This thing's setting up hidden right now. Setting up hidden div. And that's hidden bear div. Look at the fishers though, boy. These fishers are pretty spent. In lockstep too, man. Well, you've got 2 down to 3 SD band. You've got 2 at the 2 SD band. The down move is probably about over, but then I see this hidden bear setting up, and I'm like, interesting.
Put it on the 6 hour. BTC is looking like a continuation from the 6 hour, and that's in the next 3 hours and 17 minutes.
We talking BTC now? Hold on.
Well, Aptos as well, because if BTC dumps, pretty much everyone's going to dump.
Pretty much. That's how it works. It's all this fun stuff. Oh, never mind. Why? I don't understand why they popped that up on crypto. It's got nothing to do with crypto. Oh, is that it? Oh, cryptic. APT. Elon Musk tweet pushes Aptos price over $13. Is that like old news, or are these people just the dumbasses? What are they on seeing? This is where it was over 13. And then what happened? Oh, Elon pumped it to 13. See, it's all, did you really think that's what's happening? I don't care who you are tweeting about anything. You're going to see it all in the volatility to begin with. Let me see. When Aptos was at the top, I mean, that was a clean chart. Look where that pullback happened, right when it crosses zero mean, right? And that's a point of div right there. That's a point of divergence for this high. Bam, man, you got a 4-hour candle sell-off immediately. And from this point right here, right, boom to boom, that just set up hidden bull, right? Hidden bull. Whoop, continuation. Went right back up to the top again. Interesting. But this thing is definitely going to be a bit surprised to see. Let's throw Aptos on here. Dun, 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 dun. There you are. Let's see where this thing dumped to. Tight daily. Tight daily. Tried to find support on the first support level here of the daily range. Got a couple wicks right to it. Right to it. You start using this indicator, you'll be like, what the hell is this? Is this a crystal ball? What is this thing? You'd think it was. Because again, when you start to understand the distribution, daily and 4-hour levels, hey man, what are you doing here? Where's my Laplace populating? I'm going to get you. All right. Let me see here. Every time I go to reset it this way, how did I do it the one time where it just immediately populated? Can't remember. Let me reset this chart. Hold on. Here's what I'll do. Let me flip. Ooh, look at that. Went right to XRP. Sorry, Warlord. I got to pull back off that. Let's let Laplace populate. Come on.
Aww.
Laplace distribution does not like Aptos. It's going to fail on me again. It's thinking. Yep, sure did. Really? Come on. Maybe it likes Doge. You'll flip to Doge. There, let it populate. Laplace distribution. Now we'll go back to Aptos. Laplace, please.
Pronto.
Pronto. Wow, man. There we go. There we go. Yeah. Yeah. You can see it tried to find support on that on the daily. That is the first support level of this daily volatility range. Look when it rejected off the bottom side of the 68.3 right there. Boy, it tried. So now you're talking about the daily 1SD. Almost sent a wick to it. That's the second support level of the daily volatility range and the first standard deviation normal distribution. Popped up from there. It's actually a good thing. I'm telling you, man, this thing is, see on low time frames. Go to 33. See if there's some bull div setting up. God. No. Z-score, yes. Z-score, yes. Fishers, yeah, at least three of the four Fishers. DLP, right? Lots of bull div. You're still having an outlier though. Let's see here. Where is Yasha? You got anything to talk about real quick? I got to go see a man about a horse. I'm literally doing the pee dance sitting down.
Hey.
Yeah, I'll be right back.
I'm dealing with the regulators. What do I have to talk about? Yeah, while I'm at it, you guys are looking at some pretty funky indicators, and if you're new to this channel and you have not yet signed up for our free trial, you should definitely jump into our Discord. It is free. Come and get your free 2-week trial of the premium indicators that Alpha Trading makes. That's what you're watching on the screen that Bilbo is talking about this whole time on the live stream. And you get access to these and other indicators that are actually in the premium package. It's free, so come and check it out. Again, it's a 2-week free trial. Come on in. Just put a request ticket in the request support channel, and we'll hook you up as soon as we can. We do get backed up sometimes with requests, but we get to them. So come on in. And in the meantime, you should learn the basics of trading volatility and entropy and probability statistics. And to do that, we have a nice cheat sheet and documents and videos and tutorials and whatnot. And so you should watch like videos on our channel. We even put up a nice intro video about how to do that about a week ago here on TradingView in our stream channel. You can see it there, or wherever else we distribute our videos. Links to it are in the Discord too. It's a good overview of the introduction of the VEPS, and there will be more such videos coming out, but we do already have a slew of tutorials for the basic indicators that we have, and those are also available on the Volatility Starter Pack. If you want, you can request free access to those. Those are available freely to whomever decides to try them out. And as long as you're an active member of the Discord, you get to keep access to them. So come on in and make yourself at home. You're welcome. We are a friendly group of traders. Happy to answer questions about how to trade the VEPS happy to answer questions about how to trade the VEPS if you are trading without the E. And hat tip to our makers of indicators who are fantastic and phenomenal. They are just making awesome tools. And if you guys are signed up already, for those of you who aren't, if you haven't noticed already, your Fisher is updated and you just have to reload as soon as the access is granted. We'll send out a notice. I don't know if it's been granted or not, but I think it hasn't yet been. But as soon as it is, those of you who are subscribed, all you wolves will have the AT Swiss. And that is a very powerful indicator that combines a whole bunch of different indicators of entropy and everything else. So I definitely would say check that out as soon as it's available. And remember, Alpha Trading, we trade VEPS because that's what works. If there was anything else that works, we would use that if anything else worked better. But guess what? We haven't found anything else that works better. And we've been developing insanely awesome tools for years now. We have literally pierced the glass wall, and we can see through the wall into parts of the future with tools like our RMLR and our projection boss. And that is not a joke. If you can know anything about the future, what's that worth to you? And we will literally let you try that for free, and you can see for yourself. Our tools will literally tell you what is happening in the future with incredibly high accuracy. So yeah, have fun, check it out. Welcome to Alpha Trading.
And thanks for that chart added yesterday. That very helpful.
Oh, I'm glad it's working out for you, man.
Yeah, I'm glad.
Sorry, I didn't put the right indie there in the first place. It's the right indie, but it was a different version of it. So thank you for pointing that out, so I can update the version that everyone actually uses, other than me.
Jesus, the chat was on fire. I didn't notice. Here, I'm just reading this chat. Good Lord.
Yes. We do have some activities going on.
Interest rates, don't care. That's the first question. Django, don't care. Let me see here. Oh my God. What do you get? No wonder it's been so quiet. You guys have just been typing. Let me see here. Trying to read all this. Holy crap, man. You guys went off in this chat. Shit. Oh, I missed a lot. Okay, yeah, I see. So the Swiss. Oh, I see.
Can you take a look at SPY right now? I'm just looking at a moment. Just wanted to confirm.
Let me see here. Let's see. Oh, yeah. Oh, that's Aptos. SPY. How the hell did you get up? Oh, no, there's SPY. Yeah, it dropped to that weekly support level. Now it's trying to get back up above. Let me see something real quick. I got to get Dixie back up over there. There we go. Everything's normal.
Well, I was seeing the 15-minute, and it on the RO starting to cross that mean.
Let me see here.
I might be saying it wrong, but whatever.
No, zero mean. Let's see.
Zero mean, yeah.
SPY. Boom. 15-minute. Yeah, I mean, had a little bit of bull div here. Definitely had a little bit of bull div. That's it, though. But yeah, it did. Across the zero mean right back here. Not really a divergence play, but you can see how, right? We had an outlier telling you it was negatively correlated. So you get the downside move, and then as soon as the entropy turned down positively correlated, it kept dropping, which that's what you're going to see. Contraction, right? Here's the expansion. When the market opened, negatively correlated. From that 100 percentile, it has done nothing but contract, positively correlated. So the data set just kept floating down. But now, contracting, the correlation broke. The volatility is going to do what it does. It expands and contracts. This is what's the most important, right? The breaks in correlation. The trend to the downside, starting to bounce up off of this. That's a 3 SD band. All right, let's see if it crosses back up here in the next candle or two above the 2 SD band. When's the predictor going to flip? When is the predictor going to flip? We got one Fisher up out of the 4, down by the 2 SD band. No div on the DLP. Was there any div on anything? No. Sure wasn't. But it did go to, literally nailed the expected move. What was it? Yeah, and see, and with volatility, these expected moves, where did that end up? 408.5? Yeah, almost hit it. Almost hit it. Real close. But you get stuck under this 1SD. This thing, here's the bottom. Here is the bottom of the range, of the daily range. And that is the second support level on the weekly. Right? 407 area. 407 area. Look at the dollar, man. Look at the dollar. Finding strength. All right. I didn't think it was going to get by the 1SD, let alone the weekly. Once this data set, look, once the data set got up here, right, it literally closed just barely above the center of that weekly. What do you think? What do you think the dollar bulls did? They set up right here, right at the bottom. They got through. The bears are waiting here. Bulls ran it on them. Bulls ran it on them to the center of the range. So then the bears are going to immediately, those algos are going to set up right here to buy. That's exactly what just happened. Right? You had the bears reject at the center. The bulls are like, all right, we're going to set up shop at the bottom where you were, but we made you move. We made you go to the center of the weekly. You're no longer here. We're going to take your position. We're going to jack you and run this thing to the top of the weekly. The bears are waiting here now. They're going to be able to fend off this run. We'll find out shortly. If they don't, SPY's going to drop. SPY could drop to the bottom of the daily range. That's it. Final support level down there at about 407. Man, them puts are only 17 cents. But yeah, I don't know, man. I don't know. I do not know. That's why I was looking at the Forex pairs. It looked like there was on lower time frames. Bull div building for the euro. The euro dollar pair. Let's take one quick peek at that again. Whoops, let me go back over here. But yeah, that's what's going on. So you're below the 1SD right now. That's SPY. This dollar. Yeah, still. Now, remember, if I would have taken that position earlier, right? I'm out of the trade. I was out of the trade. Reevaluating. Probably barely lost any premium at all. Barely lost anything on the trade. So now I'm waiting. Is this thing going to be able to get back up? It's more shaping up that the afternoon session is going to be the play today. Unless, because what are you going to do? You're going to buy a put when you open up down here below this level? Absolutely not. I wouldn't have at all. I'm chilling. I am waiting, especially the dollar messing around over here. Yeah, I need to see a rejection. I need to see a rejection of the weekly. And they pile drove this right up the bull's butt here. Caught them off guard. But I'm telling you, they're up here now. These bulls these bears could definitely send this data set back down. And then you'll see SPY climb up by the end of the day, probably back up to the weekly range. This is a magnet. But don't think, at the bottom here, this is where the trench is, man. This is where they're digging in right now on SPY. The bears are digging in. These bear algos are just waiting, right? They had their morning fun. Now they're like, oh, let's see if they're going to run this thing back up. Dollar, what are you going to do?
By the way, I don't know if you saw it on Bitcoin. I was just really busy earlier. I didn't hear a bunch of stuff. But there was a very nice intersect a couple candles ago on the 30 power mean and the 1110 RMLR.
What time frame?
See that on the 4 hour? On the 4 hour Bitcoin, the 30 power mean and the 1110 RMLR. Yeah. Had a nice little intersect for a couple candles. Just ended 2 candles ago. So expect some movement in the next few candles.
Yeah, especially maybe 1SD band. What am I? God, I'm on Google. Jesus, we're talking Bitcoin. Hey, Google had an intersect too. I mean, what the hell's happening here?
Right.
That's why I was like, oh yeah, here it is. No, that's Google, bud. Here's BTC. Wait a minute. Yeah, this makes more sense. Let me see this 30 power mean. Where are you? Populate, you little booger. Intersect, huh?
There you go.
Kind of rejection. Let me make sure I got mine. I'm pretty sure I've got this on the 30. Yeah. 30 length. Power mean. You're saying intersect?
Mine is intersected yet.
On the 11 length? Oh, I'm on Coinbase though. What are you on, the index?
Oh yeah, no, I was on index.
Let me pop it on the index real quick. I think this is it. Yep.
Trusty, no Armstrong charts.
Come on. I swear. Trading View. Come on, man. I didn't get. We're gonna have to look at each other. We're gonna have to see why we're different in this area.
Yeah, we have slightly different settings in the UPM. That's all.
Because I've got it on the 30. What do you got different?
Yes, I saw
30 power mean. You got a smoothing on 18. I mean, that's the only thing that could be different is your smoothing.
My smoothing is on 30.
On 30?
30.
So you got 30 length, 30 smooth?
Yes, sir.
Well, let's see what that did. Don't take a minute.
But on my actual power mean, I don't use any smoothing. I put the smoothing on the ribbon, not on the actual power mean itself.
Come on. It's thinking.
Why?
That even made it worse. Dude, what's happening?
I'm probably using a different UPM than you are, so. I will share with you offline.
I don't know what you're using. There's only one power mean type. It's all good.
No, I mean, the setting is different, I think, than you have.
Well, you said 30-30. I put it on 30-30.
I know, but that's on the smoothing's on the ribbon, not on the power mean itself. The central power mean is 30 with no smoothing.
So you got zero. You got no smoothing on. Use smoothing. Let me turn smoothing on.
On the actual power, on the power mean, on the 30 power mean itself, no smoothing, just on the ribbon.
The ribbon. You're talking power mean, or you're talking the ribbon. So just on your single power mean, you have to. Well, I turned the smoothing off. But it's thinking.
I have no.
It's thinking.
Smoothing on. Yeah. No smoothing on the ribbon.
It's still, yeah, but it's kind of a rejection, not an intersection. They were right on top of each other.
Oh, it intersected and then it bounced off of it. It didn't cross it, but it bounced off of it.
Boy, it wants to reject. It definitely wants to reject.
Yeah,
it's definitely coming down.
Which means now, and you can see when it finished 2 candles ago, so there's movement coming.
Yeah.
For sure.
Okay. Now we can get back to business.
It's going to run through it again in a couple candles.
Now I can turn my smoothing back on. Everything's back to normal. Now we got it figured out. And I just saw Donnie's message, and that's cool. So the Swiss pack was released as a separate. So Entropy's still there, the original Entropy. Won't notice a change. We need to grant access. Folks who have it. Yep. Because, the Swiss pack, I mean, there's a lot of stuff going on there. A lot of stuff. Where is... Oh, yeah, look. We got Matt from Alpha Trading in here. He doesn't even know what a clone is. Tisk. Oh, shit. Neither do I. Oh, nice. I see the Elon little gif there. It was me all Elon. Sweet. Okay. Of course, we got Beavis and Butthead rocking. Beautiful.
The Musk one obviously is taking the piss out of everyone who says it. It's him. Sure. Yeah.
So
sure it was.
There's the tap. There's the tap. The top of the weekly. Tell you, man. Thing is, though, if Dixie gets above this weekly, it's got to make a move, man, or it'll be right back at this weekly range. I'm telling you, the bears are going to try to fend off this move right here. I don't know, though. I don't know. Let's pop this on Dixie. Let me see if this thing's trending on low time frames. Yeah, it is. Just riding the 2SD band, too. Yeah, this thing's still in trend, and it's contracting from 100 percentile, negatively correlated. mean, this thing could walk up for a while. Look at the variance too. 2 outliers to the top side, and then the variance comes down, negatively correlated both times to continue the walk. You're crazy, man. Thing's moving. Thing is moving, but I'll tell you right now, it's definitely setting up some bear div. Especially you go back up and reject off this zero mean. These are all higher highs. They're all above the zero mean. You reject here with bear div. At some point, this thing's going to come down. You would need this return oscillator up in this area, up by the 2 SD band, to shut down that action. Got the 2400 all the way at almost 100 percentile. 98, or no, that's a 981. Let me blow this up. Are these things expanding or contracting? They're still expanding. Actually, 2400 is starting to contract. Starting to contract a little bit. 981 expanding. Let me check these reads real quick. This is 15. Let's go, baby. Let's go. It's going to be one of the last things we do. I count 11:05. Yeah, we got to get off here. What's the weather look like? I'm going golfing. 981 is expanding. Negatively correlated. Negatively correlated, huh? But it's all the way up, man. It's at a 97.5. Sounds like a radio station. 2400's going sideways. Sideways, sideways, sideways. Negatively correlated. She's got pretty much all are saying up. Pretty much all are saying up. But this is on a 15-minute. That's why. And it is trending. Could definitely get above that weekly. So trending on the 33. These fishers, man, making a move. Yeah. This thing's not going to stop. This thing is not going to stop. Not yet, anyway. Let's see. Close a 15-minute candle above here. Man, it's been a while. But if that does happen, you could see the dollar run to the 95 for Laplace, second standard deviation, right up in this area, 102.1. That is gonna hammer SPY down to where? 95 for Laplace, second standard deviation to the downside, probably. You think these are correlated right now? Absolutely not. Negatively correlated to the T. Correlation. You know what I wanted to check too? This is going to be the last thing we do today. I forgot to do this yesterday. So I saw some goofy talking about correlation. Probably has no idea what he's even talking about. Imagine that. A YouTube Jimmy. Okay, what data set we got up here? BTC. Yes, we do. All right, BTC. What are we going to correlate this with? It's probably correlated with Dixie right now. Yeah, we don't want Dixie. We want Ethereum. As I said, the correlation in Ethereum and with Bitcoin is breaking. It's like, oh, really? Is that what you think? Let's see here. Where should I go? Since I got Bitcoin on Coinbase, I'm definitely going to throw ETH on Coinbase. Oh, yeah, correlation's breaking, all right. I swear, man. What, this is a 90-minute, though. Let's go to a daily. Yeah. Looks negatively correlated to me. What's wrong with people? It's all gaslighting BS. Huh? Overall, this is going back before 2018 on a daily. Right? Very, very few times do you use correlation. Do you lose correlation? Wait a minute. Yeah, I'm like, what is not right here? Remove. Now. Boom, you hit that little cross, compare symbol. I want ETH. I want ETH Coinbase. There you are right there. Pretty correlated. Pretty freaking correlated. Indeed. Let's see here. Let me see here. When did this thing lose correlation? Yeah, Ethereum was going up. BTC went down right here. It's when it lost correlation. Gained it back really quick on the down move. This is what blows my mind. Look at these two data sets. They're in lockstep, man. Nothing in crypto is breaking correlation. slamming them into these shit coins, and the shit coin will pump, break correlation. Overall, on high time frames, though, crypto was correlated. For God's sakes, it's a $1.1 trillion market. Yeah. You get this up about 5 trillion, in between 5 and 10 trillion, you might see some things breaking away from Bitcoin, or let's put that another way, Bitcoin breaking away, right? People dumping altcoins to slam into Bitcoin because it's going to the moon. That's when you see the correlation breaks. That's when you see the correlation break. All right, that's enough correlation. Just wanted to check, because I know I'm not crazy. Crypto's not breaking any type of correlation whatsoever. And the dollar bears, man, they're going to try to run this thing back down. What time is it? 11:10? Yeah, I would have to see this get back down below the weekly. I mean, like right now, right? Got a bad entry earlier. Might have got right back in it. To be honest. I mean, hey, scared money doesn't make money. At the same time, don't be emotionally attached to your trade and limit your loss. Limit your loss. It's all you got to do. Get out of the trade. It's pretty simple. All right, we covered a lot today. 2 hour and 10-minute stream. I'm going to get out of here. We don't want to make it too long for people to listen to. Once again, if you're watching on TradingView, we appreciate your support. We've been getting a lot of views lately, and we do. Trust me. Come into the Discord, see what we got going on. All right, there's nothing for sale. We got a free trial on our indicators. If you like them, it's incredible. The low price we charge for these things is, we're not trying to extract money from the community. These devs need to be paid, though. I mean, we all trade, but it's like these guys put in a lot of hard work making these indicators. This is how they're getting paid. People getting the subscription, going to the shop channel. Look how cheap it is. It's ridiculous. For the amount of indicators in the system that you get, this is only part of an edge, right? The indicators we have, the strategy that you build with these indicators is only part of your edge. The most important part of your edge is those 3 tenets of alpha trading. Do not be emotionally attached to your trade. Always take profits often and early, and always limit your losses. Figure out that part of your edge and follow it. Follow it. Whatever time frame you enter, if that candle closes below your entry, get out of the trade. It's that simple. Don't take the loss, because the market will try to take more from you. It happens all the time. All the time. And this is looking to set up to be a great afternoon session, right? If you were fortunate enough in the morning, even after the dump, to get in on a put, 409 or something, kudos. You got some little profit. Hopefully you took it, because guarantee it, if you got in it up here, that premium's gone. You already lost all your profit. Probably losing a little bit of money. So yeah, nothing to say about up here, like 412s. 2 days in a row. Good stuff. 412 calls in the afternoon sesh. Could work out. Everybody watching in the Discord, thank you very much for your support as well. YouTube, Twitch. We're not getting too many views there, but hey, where are all the traders really at? TradingView. That's all we really care about. And there's a lot of people watching, and we appreciate you guys. We'll get back at it tomorrow morning, 9 a.m. Eastern Standard Time. Hump day. Everybody get their hump on. And all that being said, wherever you live out on this big, beautiful blue marble, have a wonderful rest of your morning, afternoon, or evening. Alpha Trading out.
Good FA.